12 Biggest Tax Write-Offs for Online Businesses 2022.
You are watching Tax and Finance Tips. How can I? Why? One question, one video. Do you have any tax or finance related question in Canada or USA, personal or corporate? Ask your question in comment section of our channel below, starting by how can I or why? We will answer for free or and make a video just for you.
The e-commerce space is growing at a fast pace across the globe. Today, it's a multi-trillion-dollar industry with more players entering every year. Setting up an e-commerce business is easy as you don't need to spend a fortune on it. You can start an online business from your home as well. At the same time, an online business allows you to showcase your product according to your wish and cater to a broad audience. Despite all these benefits of online business, you should know how to reduce your tax burden by claiming various expenses to gain substantial profit from the venture. We have already made a detailed video on how startups and small businesses can reduce their tax burden. The link of the same is given in the description box. Watch the video to know more about it. Yet certain expenses are unique to online business, and they are also qualified for a tax deduction. In this video, we will discuss how online businesses can reduce their tax burden. 1. Costs associated with website maintenance. The spine of any online business is its website. Fees for getting a website address, web hosting, and developing the site are eligible for deduction. If you have a product-selling business, then you may need to take particular affiliations. You can claim costs incurred while availing of such services. 2. Software expenses. To make your website appealing and top-notch, you may need to include specific pictures and templates in it. Often you need to purchase these things to avoid copyright issues. However, these expenses are deductible. Further, if you use any search engine optimizer software such as Ahrefs, SEMrush, etc., you can claim the cost of these tolls. 3. Advertisements and marketing expenses. If you use any online marketing tools, you can also deduct their cost. As part of your online marketing, you may need to publish newsletters and social media posts periodically. Doing them alone may not be practically possible, so you need to avail these services from professionals. The fees you pay for these services are eligible for deduction. Apart from this, all your offline marketing expenses are also eligible for a tax deduction. It includes fees for designers, copywriters, marketing professionals, and publications. 4. Internet service expenses. The cost of internet services you incurred to carry out your online business is eligible for a deduction. If you operate your business from home, you must record how many hours you used the internet for your business purposes. Suppose your average daily use of internet is 10 hours, and out of it, 6 hours is business usage and the rest for personal purposes. Here, you're eligible to claim 60%, 6/10*100, of your internet bill. If your monthly internet bill is $150, then you are eligible to write off $90. You can even include the cost of internet services availed of while on a business trip. Besides, you are eligible to claim the cost associated with the number of hours you used your mobile data. However, if you use the data of your personal number for business purposes, you may find it hard to keep track of both usages. Hence, it's advisable to keep a separate number for business affairs. 5. Processing fees. To process the payments received from the customers, e-commerce businesses need to pay a fee to payment service providers. Stripe, Square, and PayPal are examples of a few payment service providers. These companies charge between 2.5% to 4% as processing fees. And this charge depends upon the type of card, the level of risk associated with the transaction, and the pricing model that the particular payment processor follows. Usually, online transactions attract more processing fees than in-store transactions as they carry higher risks. The CRA considers processing fees as a business expense, hence it's tax deductible. But only a few online business owners are mindful of this fact, so they usually subtract processing fees from the net sales and report it as gross income in the tax return. But the correct way is to include processing fees in the deductible expenses and report the entire sale amount as income. 6. Packaging cost. To ensure that the product reaches the customer without damage, you must use appropriate packing materials. Prices of these materials are tax deductible. Under packing costs, you can include expenses associated with boxes, tapes, packing materials, envelopes, marker pens, printing costs, paper, etc. 7. Telephone and utility bills. You can deduct the cost of telephone calls you make for business purposes. It's wise to keep a separate number for business calls than using the same number for personal as well as business uses. If you're using your home as a work area, you can deduct household utilities such as heat, electricity, and water from taxable income. However, you can claim only that much percentage from the bill, which is equivalent to the portion of the house, in square feet, you occupied for the business. Suppose your business occupies 15% of your home. Here, you can claim only 15% of your household utility bills. 8. Office supplies. You can claim the cost of small office supplies such as pens, pencils, notebooks, files, etc., in the tax return. At the same time, you can't claim the cost of your camera, laptop, etc., under this head as they all fall under capital expenses. 9. Home office expenses. To claim home office expenses, first of all, the business should qualify for any one of the following CRA criteria. Your home office space must be your principal place of business. There should not be any alternative workspace such as co-working space or an alternative office for your online business. You use the space exclusively to earn income and not used for any household uses. Your workspace can be a room at your residence, a converted garage, or an auxiliary building. If your business satisfies the above criteria, then you can deduct a part of your household expenses. How much amount you can deduct depends upon what portion of the total area of your residence you use for business purposes. Suppose your home is built in 2,000 square feet, and you use 300 square feet of it to run your online business. Then you can claim 15% of your household expenses in the tax return. Apart from telephone and utility bills, you can deduct a portion of costs associated with home insurance, property tax, mortgage interest, and capital cost allowance. In mortgage interest, you can claim only a part of the interest, and the repayment of the principal is not eligible for a deduction. Also, it's not wise to claim capital cost allowance with your home office expenses. Assume that you're claiming CCA for your home office every year, and after a few years, you made your mind to sell your residence to move into a better one. Here, while selling your current residence, your home office portion may not get tax exemption. If you use 15% of your home for business purposes, and you're selling the house for $500,000, then $75,000 will be taxable. 10. Skill enhancement expenses. As a business owner, you need to upgrade your skills to keep pace with the changes. And for the same, you may require to attend seminars, webinars, or other skill enhancement programs. The costs associated with all upskilling programs that can directly intensify your everyday business operations are tax deductible. 11. Subscription expenses. Subscription expenses related to industry-specific magazines and newsletters are tax deductible. At the same time, you can't claim the costs of general interest business magazines. Hence, while claiming subscription expenses, make sure that you include only those subscription expenses that are related to the industry in which you operate. 12. Sales tax. As an e-commerce business owner, you may be selling your products and services in various provinces across Canada and even outside Canada. While selling your products or services inside Canada, you should know which GST, HST rate to be charged. And it depends upon the type of supply and the place of delivery. For essential items like basic grocery products, GST, HST is 0%. For other taxable supplies, 5% GST is applicable if the delivery is made in any non-participating province, 13% HST is applicable if the delivery is made in the participating province of Ontario, 15% HST for any delivery made in any other participating province. If you're selling products outside Canada, you need to charge taxes according to the system of the country where your product ends up. For example, if you're selling products to a customer located in the United States, your customer may need to pay sales and import taxes. On the other hand, if you're selling products in a marketplace platform such as Shopify, it will automatically manage taxes when a customer places their order. In Canada, Most small business owners are not required to collect GST or HST. Only those businesses whose sales exceed $30,000 are required to register for the GST, HST. If your business is registered for the GST, HST, you must charge and collect the GST, HST on all taxable supplies of goods that you make in Canada. Also, you're required to submit a GST, HST return monthly, quarterly, or annually. Additionally, take the help of a tax expert to ensure that you charge your customers the correct sales tax rates. Apart from the above-mentioned business expenses, regular costs such as business insurance, bank charges, business loan interests, legal and accounting fees, travel expenses, vehicle expenses, salaries, etc., are eligible for tax deductions. We have already covered these topics in the tax write-off for startups and small businesses. Please watch it to know more about these deductions. Depending upon the nature of your business, you may be eligible for more tax deductions. As they are specific only to certain types of companies, we have not covered them there. But you can contact us to know more about it. Tax deductions are significant for all kinds of businesses as they help you retain more profit. Having more money in your hands enables you to expand your business as soon as the opportunity arises. For more, watch this video on how to write off taxes for small business and entrepreneur and pay almost no tax. So don't hesitate. Feel free to discuss your problems related to taxation with expert, this video being only for information purpose. Share your thought on comment section and subscribe for me. Thanks.